All right, so I just want to get your take on the quarter. Two areas in particular, automotive and robotics, and of course, data center.
Yeah, well, data center was strong. I mean, look, they were strong across the board. They certainly beat on the top line and the bottom line. I think Q2 is going to be interesting. As you mentioned, they are taking that $4.5 billion hit, though that was down from estimated $5 billion. And of course, the China restrictions will be knocking out about $8 billion in potential revenue from Q2. But, across the board, their business was strong, particularly on the data center side. The global AI arms race is in full swing, which is really exciting to see.
So really exciting. So you kind of pointed out one of the things I want to talk to you about. The charge when it comes to China, it was $5.5 billion. They moved it down to $4.5 billion. They were able to salvage some parts of some chips and put it to use in other areas, according to the earnings call. In your mind, when we're looking ahead for China, are investors going to continue to be as forgiving when it comes to these export controls? Or is this one-time charge that was excluded from EPS estimates? Do you think that's a one-time thing? And from this point on, investors are going to judge Nvidia based on some of the issues it's having with China. Not its own fault due to export controls, but some of those issues.
Yeah, look, I think the China issue is obviously not resolved, but it's going in the right direction. So I think that, in my mind, I think it's a one-time charge, and I think things will be resolved as the coming months move on with negotiations with the administration. As Jensen mentioned, there is a big push to have China have access to the various chips, whether it's the slim down chipset that they're developing for export. The great thing about Nvidia's business is their dependencies that they've built. It's their CUDA infrastructure, right? So, they need more people working on their architecture to lock people in for the future, build that moat, and that's what they've been really good at. So they need China, and I think the administration understands that. They understand that where the growth of AI is coming and how to benefit, the companies that are native to the United States.
All right. So obviously, this Nvidia report gave a lot of confidence to the quote-unquote AI trade. We were showing some of the other names moving higher in the pre-market, names like Supermicro, et cetera. As you look just at the broader landscape right now, you have an ETF that covers the broader landscape when it comes to artificial intelligence and the super cycle. After this report, what other areas benefit? Is it hardware? Is it software? Is it data centers? Is it power companies? Where do you see the next boost, the secondary boost after this report?
Yeah, I mean, look, I guess the data center and chips and semiconductors is the core of the infrastructure. That is where the hundreds of billions of dollars of CapEx are moving right now. So if you want to invest in the companies that are generating profits from the hyperscalers' investments in AI, it's the infrastructure, it's data centers and semiconductors. But power, you mentioned, is very important. We, in fact, just made a big trade in our portfolio day before yesterday. We added GE Vernova. There's a lot of power issues, and what's happening is that the data center developers are actually building their own power sources, largely using natural gas. We've got a lot of natural gas, but guess what we don't have? We don't have turbines. So GEV is the leader in developing those turbines. So we just added a big stake in GEV into our portfolio. It's now our fourth largest holding in our portfolio.